New India Assurance is in news from last few days, and I'm joined by Madam Neerja Kapur, CMD of New India Assurance, to talk more on that. Thank you so much, ma'am, for talking to ET Now. I just want to ask you, what's new happening in New India?
Thank you. Thanks a lot. And it's a pleasure to be back on your program. So what's new in New India? A lot of things happening on different fronts. For instance, we are gearing up for RPC and for implementation of IFRS. Plus, we are in the process of recruiting a lot of new specialists into our organization. Various chartered accountants, engineers, automobile engineers, doctors, etc., who will help in the company's growth and claim settlement process. Plus, we're taking a lot of new initiatives and coming out with a lot of new products and improvements in our existing products, be it health or motor or miscellaneous products. So a lot of new things happening in various fronts across.
Okay. A lot of new things happening on various fronts, and we have seen a rally in New India stock price in last 1 month. So just want to understand, ma'am, what are the efforts you are taking to improve your combined ratio?
Yes, in the first half of this year, we have seen an impact on our ICR actually going up, though our intention was, to improve on the ICR, incurred claim ratio. But we are seeing that there have been a huge number of catastrophic claims occurring in the country. For instance, we started with the cyclone Biparjoy, and then there were the catastrophic losses in North India, then the Sikkim losses, and now we are seeing in Chennai, there's a cyclone which is ongoing there. So this has resulted in an increase in the number of claims in property that we are seeing. And simultaneously, we are also seeing a slight increase in our expenses of management, as well as in our because of the increased commissions and rewards that we are paying. But overall, we are aiming at reducing the ICR by the end of this financial year, and a reduction in the combined ratio. The target is to reduce it by about 5 basis points compared to last year. And we are taking steps in this direction by not just price correction in various like motor and health, but we are also doing a lot more work in claims control and improving our claim settlement, fraud control, and various other aspects which will help in the claims to perform better by the end of this financial year.
Ma'am, in Q2 you have taken a hike in your retail health product. So what is the quantum of that hike? Because we have heard that hike is after the 6 year, the gap of 6 years. So what is the quantum, and it will continue in coming years also?
See, earlier there was a guideline. It was not a directive, but there was a guideline from the regulator that the price increase in health in retail should be every not more than once every 3 years. So we did intend to increase the price in 2020, but at that time there was the impact of COVID and the pandemic, and we didn't want to add to the financial strain on the general public by increasing the health premiums. So that is why in that particular year it didn't happen, the price increase, and then subsequently we have now done the increase in 23. And the price increase is ranging between 20 to 30%. Averaged would be about 25 to 26%. Of course, depending upon the age groups and where the claims ratio has been more adverse. We do not see this the price increase in this range likely to happen in the future years, because price increase basically has to reflect on the has to take care of the inflationary trends, and we do find the medical inflation is much higher than the general inflation. So what we are seeing, what we are trying to do is to reduce the impact on the public. Going forward, we would expect that this increase would be marginal every year, so that there is a less impact after 3 to 4 years on the public.
We are hearing about the 100% cashless initiative by insurance companies, and do you think its implementation of this 100% cashless can be possible? And you just spoke about the fraud detection also. So how much this fraud detection will help in to your company?
See, 100% cashless is an initiative of not just the regulator, and all the general insurance companies have joined hands to implement this. It will definitely help to get better pricing from the for medical care and reduce the outgo in medical costs. Also, it will help the policy holders get faster claim settlements, and it will obviously they'll not have an impact on the cash flow for the policy holders. When they go to a hospital, costs can go very high, and then to make arrangements for the payment of the medical bills along with the treatment can be a huge burden on the patient as well as the relatives of the patient who are looking after the patient. So our intention is to ensure that if a patient is hospitalized, they should concentrate on the medical the treatment. And to this extent, we are tying up with as many hospitals as possible. Already the public sector insurers, they do have an arrangement with about nearly 4,000 odd hospitals. It's called the Preferred Provider Network, where we have arrangements with these hospitals for providing package rates if our policyholders are admitted to these hospitals. There are a lot of other arrangements done by hospitals with TPAs, etc., which would be in the range of about maybe 10,000 hospitals. But the number of hospitals in the country is about 30,000. So if we can cover all these hospitals with the combined power of the insurance companies and the combined negotiating skills of the entire insurance companies, definitely we will be able to provide better results and better care to our policyholders.
Okay. Ma'am, about the fraudulent claim means how big it can be if you are able to control at least 15 to 20%.
Definitely, we do know that in the market, both in health as well as in motor, there will be some fraudulent elements. And when claims occur on such large scale, there is a propensity sometimes to inflate the bills and to employ some devious means at times to get claims. So it is we do employ fraud tools also and analysis tools to understand where this kind of frauds happen. So if we are able to, take a positive outlook on these claims and to avoid these fraudulent claims, definitely the outgoes will come down and the impact on the increase in premiums will also be much lesser. So that is our overall intention, is to ensure that the policyholder gets the best medical cost and also is not impacted by a subsequent increase in the pricing of the premiums.
Ma'am, I just want to understand about the expenses of management. From 1st of April, new regulation has been implemented. So how this has benefited New India Assurance, and your overall commission has gone up after this new rules, because it give a larger room to companies.
Yes, from 1st April, after the regulator has come out with the circular on expenses of management, it has been a very welcome step taken by the regulator, because this brings all the insurance companies on a level playing field. So whereas earlier we were only able to give the commissions, we were not in a position to give better rewards and incentives as compared to the other players in the insurance market. We are now in a position to give better benefits to attract better business also. We have seen, and to this extent, New India has been in a good place, because our expenses of management was about 21%. And as you know, the regulator has allowed up to 30%. So it's not as if we will go up to the full 30%. Our increase in expenses of management till now is about 1% overall impact on our books. Obviously, if our incurred claim ratio reduces, we will be in a better position to give more beneficial rewards to our intermediaries to attract the best business. But then this has to result in simultaneous increase in the right business and reduction in the ICR. So that is our aim to, if the expenses of management go up, we would like that to attract better type of business. So that impact on our business till September is in the range of about 1% overall.
My last question would be on your motor portfolio. How is your motor portfolio performing? And recently we have come across that letter has been written to all chief secretaries of state to comply on the uninsured vehicle. So how big this development can be?
This is a very welcome step because the number of uninsured vehicles in India would range between 40 to 50%. You know, it's something very surprising that even though when a vehicle is sold brand new by the dealer, so at that time the insurance is taken, and subsequently many of the insureds do not renew their policies. And even though third-party insurance is mandatory, you will find in many cities across the country, a lot of insureds do not renew the policies even for third party. So this does lead to there's a loss of premium, and insurance, as you know, is based on large numbers. If the risk is spread over more numbers of policy holders, obviously the costs will also reduce, and also it will result in less fraud, because not insuring the vehicles does result in increased fraud. Whenever an incident occurs, then there is a propensity to try and put the accident blame on a vehicle which is insured. So this coverage of vehicles, all vehicles across the country, including the uninsured vehicles, will definitely result in improvement of the ICRs in motor. It's a cycle of the better improvement in pricing will result in better insurance and better claims results finally.
And ma'am, so your strategy will change something in your motor portfolio, and how that motor portfolio is performing?
We have already advised all our regional offices and our operating offices to contact the local state governments and the local council offices also, and to as far as possible to get the details of these uninsured vehicles, and to reach the last mile of the policies, the insureds, and try to get these insurances done.
Thank you so much, ma'am. Thank you so much.
Welcome.